Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 59. And based on your request, today I'm actually going to be going back to lease options. Lease options, as mentioned, it is a form of creative financing. So I guess it is on some level still in line with everything that we're doing right now. And if for nothing else, as I mentioned, this is really meant to be very much interactive. So I really appreciate the fact that you actually send me a deal like this late last night just because you were considering jumping into it. And so what I'm going to do now is I'm going to pull this spreadsheet up. I did manage to actually get your information down on the spreadsheet so that I think everybody will have an easier time following because this is what we were doing already. Here we go. Okay, so what do we have here? Let's take a look quickly. First thing first, let's take a look at the purchase information. As we already know, ideally there needs to be money in the buy. This is one of probably the only strategy where maybe depends on the situation, and that's a giant maybe, as you know, because rule number 1 is always making sure that you got money in the buy. However, depending on circumstances, market movements, and your due diligence, potentially if the comp's coming back at 400 and you are buying it at 400 right now, perhaps it is acceptable. And again, it during the really crazy times, and by crazy I just meant that when properties were selling with unconditional offers within 24 hours of listing, or even most of them don't even hit the public market and they are basically pocket listings that are getting sold. This is basically what's happening because the movement is so high and everything is supply and demand. However, this is where you would actually have to really explain to the tenant buyer is that if you're really set on this house, you need to understand what's happening in the marketplace. Now, sometimes the tenant buyers will push back, and I know I've actually used this response already before when we were going over the lease options episodes, when they are challenging us on their monthly payments. However, this is also one of the other places where we would actually let them know, just so you know, this is the market condition and the offer process may not always be as smooth as we would like it to be. At the end of the day, everything is determined by supply and demand. And so also at the end of the day is really willing buyer and willing seller. My apologies, my cough is coming back a little bit. I don't know why it's not going away yet, even though I feel pretty much 99% recovered. So the point is, let your tenant buyers know that, hey, just so you know, we're going to be educating you and sharing everything that's happening with you along the way. So you're always part of the decision. Excuse me. You're always part of the decision-making process. And that's important simply because we always let them know that, hey, remember, the reason why we're even working together, meaning we are on the same team, okay? We're not on opposite sides. It's not you versus me. So the reason why we're even working together is if you were able to actually get qualified for your own mortgage right now, by whatever means, we wouldn't be working together, first of all. Second of all, what that also means is when you are actually dealing with your own offer process, this is probably not going to change too much either, meaning you are still going to be dealing with any sort of market movements and market situations that we're all subject to, okay? And so at this point, the deal that the investor who put this lease option program together has made an assumption of 80% loan to value, basically means 20% down payment. So remember, based on stress testing, you want to make sure that perhaps you actually budget for 25% down payment, and as a result, 75% loan to value. So that would change the numbers slightly. Legal fees, I'm not going to change that as $3,000 per, which again, in my opinion, is likely on the high side, especially given the purchase price. However, some of you might argue that purchase price doesn't really have much to do with exactly how much legal fees will end up to be, just because the amount of work that the lawyer has to do is the same, whether it's a $400,000 purchase price or a $2 million purchase price. Okay. And so appraisal and inspection, in this case, it's only 500. I would probably double that at the very least, regardless, unless you already know that there is some sort of special deal with the mortgage broker or the lender that's coming in to back your deal. Regardless, stress test it, double it. Okay. Insurance premium, again, I still don't quite understand, because this looks like it's from the same investor that was pumping out deals before, that we also did a live deal analysis on. So just make sure that you double check with them in terms of what insurance premium actually means, or maybe it's just a line item that they have included, and it can mean a lot of different things. Okay. And then land transfer tax. This deal is actually happening in Ontario. So based on the current purchase price, the land transfer tax is $44.75. And at this point, what they're saying is that they are willing to wholesale this deal. So they are going to be selling it to an end buyer or an end investor at $6,000. Now, again, in Ontario, there is HST, harmonized sales tax, and it's 13%. However, it didn't seem like it was included in the calculation, so I'm going to leave it out as well. At the same time, if I were to be stress testing this particular deal myself, I would definitely do that. And the tenant buyers apparently have $20,000 coming in. Now, I don't know a lot about the tenant buyers right now, because this is what's been shared with me. And so I'm just going to speak to it from a numbers perspective. So I really want to make sure that when the tenant buyer says that they have $20,000, that is not all the money that they have, because based on my experience, I've learned to basically say, if they have $20,000, my IOC initial option is going to be just about $18,000 or even a little bit less. Why? Because chances are, even if they're currently renting, they might be waiting for their initial damage deposit to come back in. Remember, they still need to go through the moving process. And what that means is even if they're not hiring movers, they might be renting trucks themselves, coordinating with friends and family for support. They might have to buy them beer and pizza to help with that. Most importantly, though, to set up utilities a lot of times in a new house. Some utility providers will actually ask for deposits as well, depending on, again, if one of the main reasons why they're going through a rent to own or lease option is because of credit challenges. Utility companies sometimes will want to hold an initial deposit for 1 or 2 years. And then once they've proven themselves to be trustworthy, meaning that they are paying their bills regularly, then they will actually get that deposit back. Regardless, my point is you want to leave your tenant buyers with a little bit of wiggle room so that they are able to successfully complete that move-in process. Early on, we've had an incident where tenant buyer and us, we were so green, we didn't even think about this. Basically, they said, we got $10,000. This is all we got. $10,000 paid down as initial option consideration. We accepted it. And what happened was they ended up getting into more debt throughout the moving process and setting up the new house for themselves. And that was not a happy scenario, even though really it was only a few $1,000s. I really want to bring that perspective to everybody, okay? If $10,000 is in this particular, not in this deal, but in the story that I'm sharing with you, is all they've got saved up towards the purchase of their new home, $3,000 to some people may not be a lot of money, but to these people, it was a lot of money. Okay, so everything is relative. I just want to make sure that I share that perspective with you so that you are able to actually make your business decisions accordingly and be completely understanding of your tenant buyer situation. And more importantly, making sure that when you're running the deal analysis, it is still win-win-win throughout the entire journey. Okay. So what that means now is that we now are looking at a total initial investment of just shy of $75,000. And so moving forward, I'm going to go into the cash flow portion. And this was apparently what got you, that's the need a deal, interested, is because they said that, oh, Monthly cash flow is over $1,000. In this case, almost $1,100. That is amazing. So these are the kind of deals that we like, of course. However, let's come back and take a look at the numbers. So I know that monthly option was apparently at $500, but they only did a monthly payment of $3,600. So I took the liberty to break it down and separate them. So what that's really telling me is that the average fair market rent that these guys are going to be charging the tenant buyers are $3,100. So again, I don't know where this property is. If I'm buying a property for $400,000, I frankly don't know any market right now across the Canadian territories that you can actually ask for 3,100. Now, if you remember, I did also mention when we were going through the lease options episodes before that typically speaking, you will find out the range of fair market rent. Maybe this particular property is sitting in a very desirable neighborhood. The condition is amazing. Maybe it's also brand new. Maybe it's got other things that are going for it. And the range based on the appraised results is that fair market rent is anywhere between $2,500 to $3,100 right now. And you want to take the high end and you fix it today for the next 3 years. I'm okay with that as long as your mortgage broker is okay with that, as long as your tenant buyers are able to afford it. Okay, so 3,600 here. And then based on the mortgage stipulations that they presented is $2,004.50 per month. Property taxes, $300 a month. And insurance is $200 a month. And as a result, we have a monthly cash flow of $1,095. I think that's a pretty decent cash flow. And I know a lot of us are going to start to be able to breathe a little bit better when we have an additional almost $1,100 coming our way. Now, coming back to profit from sale and transfer, what they forecasted is a 5% per annum growth in this market for this particular property. So the option to purchase price for the tenant buyer is set at $463,050, which means if you are actually going to buy this deal from the people that put this deal together, you want to make sure that you ask for proof that your tenant buyers are pre-approved for that amount already, okay? And obviously an action plan in terms of what they need to do, what are they currently lacking in order for them to actually buy the property at 400 today, 400,000. And so after 3 years, based on 6.5 amortization, I like a 6.5% interest and 30-year amortization. I like the 6.5%, okay? I really do, because that's basically what's happening now in the Canadian market. As we all know, based on the last interest rate hike, we are looking at 7.2% of prime rate, which means all the mortgage rates have subsequently gone up one more time. And they've also budgeted for 30-year amortization. I would personally play with the number and make it 25 years as well. So now you've got it. Earlier, we said maybe 25% down, 75% loan to value. And instead of 30 years, I would do it for 25 years. Now, 6.5%, I think that's fairly reasonable. However, depending on your personal risk tolerance or when you're qualifying for the mortgage to buy this property right now, you kind of figure out where you might get qualified for. Then you can change it up or down to get that more accurate number as you get closer to finalizing the acquisition process. And so next, legal cost at closing. Now, when you're selling, it's usually less. So it's $1,500, paying ourselves back the initial investment. And these guys are offering, once again, inspections. So it's not 50% or anything. They're saying 3 times per year inspections over the course of 3 years is $900. To me, depending on where you live and if you know and how educated you are on your own, because potentially you can do the inspection yourself or you can rely on the service that they are providing as well. And last but not least, you want to give them back their total option consideration that's been accumulated. So total profit at closing is nearly $40,000. And so again, if you take a look at here, even just if we run it down, because it is revenue, as I mentioned, round down or underestimate your revenue. So 39,000 on a month at the end, and your total profit from cash flow is also about 39,000. You add it all up now. Excuse me. I'm going to bring your attention back up here to the summary. A 3-year deal, basically looking at about $78,000 in total profit. Year after year, return on investment is about 35%. That's pretty darn good, I will say. And the one thing that I'm slightly uncomfortable with is the total option consideration amount at 8.21%. However, again, based on Canadian regulations, the tenant buyers really only need 5%. As you remember, we always like to at least double that just in case there are any more changes that are happening in the marketplace. Now, remember, this also means that 8.21%, depending on the rate and any other types of market movements, when your tenant buyers are going to go in and qualify, this can actually affect their ability as well. So again, total option consideration, in my opinion, is still 10% or higher to be safe for everybody that's involved. So for me personally, I think this deal is definitely worth looking into. Clearly, income, credit, down payment, the 3 trifecta factor, as we discussed, need to be clarified in terms of why these people are tenant buyers. And last but not least, I really want to make sure that your mortgage factors are definitely solidified ASAP so that you can get a better picture on total cash flow. Again, just that we've had the experience of a lot of investors or joint venture partners who were money partners who actually got surprises once they actually put through the accepted offer to get qualified for their mortgage. And because things are changing so quickly right now, you may end up with a better cash flow. That's always good. I'm not going to focus on that. However, you might end up with a cash flow that is well below your business decision, your need, or your expectation. So one of the biggest things, and the first thing that I would do in parallel, would be really understanding the tenant buyer profile and make sure that you get your financing qualification process started as soon as you possibly can so that you can come back and rerun the numbers for yourself. And then off we go. So hopefully this has helped a little bit. I really do like it, the way it's presented so far. So now it all comes down to the other 2 things that I would personally do right now. Remember, the strength of a lease option deal is heavily dependent on the strength of the tenant buyer. So get to know the tenant buyers, maybe even request a meet and greet early on if you like to. Okay. So on that note, we are approaching the end of season 3, and I just really want to say thank you. I am full of gratitude these days towards all of you, because it's because of you that 60 episodes feel like it's nothing. It's even for me, it felt like it just flew by, because if you remember season 2, it actually took me a while to complete 60 episodes. However, this season, it went by like a breeze. So I appreciate your engagement and your feedback, your suggestions, and this definitely gives me it's made it a lot of fun, and I hope that it's been fun for you too. And tomorrow is going to be the last episode of the season, and last but not least, Saturday, as you know, on July 29th, there's going to be a webinar that's focusing on how to work with your general contractors effectively so that when you are doing any sort of BRRRR process or flip and renos, you learn how to maximize your deals through working with your general contractors effectively. So make sure you register for that webinar. There's no cost to you. So make sure you come in, learn, and join the conversation. With that said, enjoy the rest of your day and live well, everybody.